So, why should I even care about inflation? Well, all the discussions about inflation may be the reason fixed income markets, aka bonds, have been up and down in the past year. But why? Why does inflation affect my bonds just because the price of, let's say, cars increased this year? Well, one of the ways the federal government guards against inflation is to increase interest rates and make it more expensive for you to borrow money. Then maybe you won't run out and buy that new car, which means the supply of new cars can catch up with that demand, eventually evening the prices back out. When you own a bond and see interest rates increase, you'll probably want to sell it before it matures, which means it will be worth less. Let's think about that. I own a bond paying 2%, and now new bonds are paying 3%. Who's going to want to buy my bond that's only paying 2% now? But what if you hold that bond to the maturity? Are you really affected? Many of you own bond mutual funds that own hundreds of different bonds. And as bonds within the fund mature and coupons are paid, those earnings can now be reinvested in those new bonds that are paying 3%, let's say, like in our example. I think the key is to remember why we have bonds in our investment portfolio in the first place. The role of bonds in a portfolio is to provide diversification in the event of a down stock market. And we saw bonds play their role in 2020. This is where we lean back on not having all of our eggs in one basket. The thought is, if we are diversified when one area of our portfolio is going down, then hopefully the other areas are going up, or at least not down as much, which gives us the ability to wait for the markets to rebound. None of us have a crystal ball, and even the savviest investors couldn't have predicted the economic impact that COVID created. And this is usually the case with unexpected market downturns. They catch the market off guard. Now, I'd like to end my update with an interesting fact sourced by the Department of Labor. Surprisingly, almost 4 million Americans quit their jobs in April 2021. That's the largest monthly quit level ever recorded in US history. Now, the bottom line is that there will always be crazy headlines in the news to try to scare you. Through odd economic data, reports like the one I just mentioned, or politics, even our most recent global pandemic in 2020, we saw that disciplined investors who tuned out the noise to stay invested were the ones being rewarded in the long term. So, we've discussed inflation in 3 other videos and blogs on our website, so check them out either on our YouTube channel or on the website if you're interested in learning more.